What's up, Empire Builders? Welcome to another video. Today we're going to talk about shifts and changes in the 1%, let's call it, spending. Basically, they are spending less in a nutshell, and that's what we're going to talk about today. Go ahead and click the like button, subscribe if you're brand new to the channel. This is a brand new channel that we are starting. Show us some support. Okay, so this I actually break down deeper in the Global Reset Report, which you can get if you become a premium member and pick up a Empire Intelligence Alerts membership or EIA membership for 12 months. Believe me, it is worth the money. Okay, so it's 0.045 Bitcoin or $465 through credit card if you want to pay. But yeah, believe me, it's worth it. We'll have some testimonials up on the site soon from people who are in there. But the amount of daily information we post and then reports, I think, is good. And I want to get that to great. I want to make it to where it's literally so obnoxious, the price compared to what you get value-wise. Okay, but anyways, let's dive into it. So Hollywood Hills have been busy. Actually, so much so, it's an unprecedented level. Right now, there are 100 homes on the market that are at least $20 million, 35 of which could be classified as spec homes or completely custom homes. And right now there are 50 ultra high-end spec houses under construction. It's so obnoxious that real estate agents are saying that it's so hard to drive up through the hills to even show houses. But the amount of inventory that is out there for sale is considered high right now, okay, in comparison to other years in the past. So there's a lot of sales, there's a lot of houses for sale on the MLS, and then the amount of spec homes is quite high as well. So that is from May of this year, and then we have some data and some news dropping yesterday. New recession warning, the rich aren't spending. A sudden pullback in spending among the wealthy could cascade down to the rest of the economy and create further drag on growth. High-end real estate is having its worst year since the financial crisis. Luxury retailers are struggling while discounters like Walmart and Target thrive, which they are doing quite well. Target's stock is way up. Walmart's doing well as well with back-to-school sales. I believe that they have been up as well. At this month's massive Pebble Beach car auction, the most expensive cars faltered on the block. It went like this. The $1 million cars and the high-end cars weren't selling at all, and $75,000 and below cars were selling at high pricing, which is very interesting. Little niched market that presented itself and sort of appeared this year. What was the information I wanted to show? At this month's massive Pebble Beach car auctions, known for smashing price records, the most expensive cars faltered on the auction block. Less than half of the cars offered for $1 million or more were able to sell. But cars priced at under $75,000 sold quickly, many for far more than their estimates. So those guys did quite well. Also on top of that, we've got Barney's filing for bankruptcy. I've covered that before. And Nordstrom posting 3 consecutive quarterly declines in revenue. Those are both considered, I guess, 1%er shopping. And then Walmart and Target, who cater to everybody, are up. In the first half of 2019, art auction sales were down for the first time in 3 years. Sales at Sotheby's dropped 10%, and Christie's auction sales were down 22% from a year ago. So definitely there is some hesitation with spending currently. Yet, recent data suggests that the U.S. wealthy are beginning to shut their wallets. If the spending falls further, the broader economy could start to feel the pain. The top 10% of earners account for nearly half of all consumer outlays, according to Mark Zandi, chief economist for Moody's Analytics. But their spending has fallen over the past 2 years, while spending for the middle class has accelerated. So could the spending of the middle class be enough to outweigh the spending that the top 10% account for? I don't know. Time will tell, but this is another interesting piece of data. The savings of the rich has also exploded, more than doubling over the past 2 years, suggesting that the wealthy are hoarding cash. The middle earners, or those in the 40 to 89.9% of the income distribution, have largely picked up spending slack from the rich. If job growth slows any further, unemployment will be on the rise. The middle earners will pack it in, resulting in economic downturn. So that is where things could go wrong. So if things continue to stay, I wouldn't say stay the way they are, but get worse, and the middle earners are affected, then that, I think, would be more devastational, because the middle earners, it would appear, are picking up a lot of the slack for the top 10%. And if they were to slow down for any reason on spending and economic stimulus, then we would have ourselves in a very interesting position, and it would be way more recessionary based. And unemployment would go up, which is one of the factors that is still being held down quite well, and that would largely affect the GDP numbers. Okay, that's all I got. Those 2 pieces. Have a great day. Thank you so much for tuning in. Like, subscribe, comment below, and we'll see you again in a video very soon. Bye.